We often hear about a company's board going after its founder, but what happens when the founder goes after the board of his own company? Let's find out. In 2013, Lululemon, the Vancouver-based company known for its trendy yoga and running gear, faced a setback when it recalled some of its stretchy pants for being see-through. This caused a major rift between the company's founder and its board of directors. In a letter to the board, Dennis Wilson, the founder, criticized the board for not creating enough value for shareholders over the past 3 years. He called for changes in the board structure to improve management and governance. He wrote, "I love Lululemon and its employees and remains its biggest believer and supporter. No one is more aligned and focused on shareholder value creation. I am confident that with the right management, board stewardship, and capable execution, Lululemon can return to greatness, and all shareholders will see exponential returns." He blamed the boards for not ensuring an increase in shareholder value and urged the shareholders to make the move needed to change the board. And this is where things get even more interesting. The tension escalated just before the annual shareholders meeting when Wilson announced his opposition to the re-election of 2 board members, complaining about how they prioritize short-term gains over long-term success. He expressed frustration with shareholders' slow response to the board's performance, which he believed was hurting the company's performance. Wilson, who owns a significant 27% stake in Lululemon, was prepared to challenge the board's reinstatement, considering options like partnering with private equity or launching a proxy battle to get more seats on board. To show his determination in challenging the board and restoring the company's core values, Wilson enlisted Goldman Sachs to shake up Lululemon's board of directors. But before we dive into the outcome of this shakedown, let's first understand why he decided to vote against the board. Wilson served as the chairman of Lululemon's board until he resigned, making way for a new chairman. His resignation followed controversial remarks he made publicly in 2013, suggesting that some women's bodies were not suitable for Lululemon's yoga pants, implying they should shop elsewhere if they didn't have a thigh gap. Wilson opposed the re-election of Michael Casey, the new chairman, and Roanne Costin, a long-standing board member. In a public letter, he held the board responsible for the company's recent setbacks, criticizing their lack of foresight and focus on short-term growth at the expense of long-term strategy. Wilson expressed frustration at the management's poor financial performance under the new leadership. He pointed out that while competitors like Nike and Under Armour saw significant stock gains, Lululemon's stock lagged. Despite a revenue increase of $500 million, Wilson highlighted a continual decline in net income with no earnings improvement. He openly doubted the competence of the current management to navigate Lululemon's growth in a competitive global market. Wilson also voiced concerns that the board was deviating from the company's core values of innovation, which had been crucial to his success. For example, Wilson had to recall one of the Lululemon's top brand yoga pants from stores because he was unhappy with the quality, which he attributed to style changes made by the new board and its chairman. This move cost the company millions and undermined investor confidence in its quality control. Wilson remained steadfast in his refusal to reinstate the board, stressing the need for changes. Boards are responsible for selecting the right CEO. This board needs to listen to its shareholders. I urge the board to follow the example of 90% of S&P 500 companies and declassify itself, Wilson wrote in his public letter. He believed this action would rebuild shareholder trust, steer the company in the right direction, and ultimately boost shareholder value. Wilson posed 2 critical questions to the board. Firstly, he asked about their strategy to regain the company's leadership position in the market compared to competitors and what metrics shareholders should watch. Secondly, he inquired whether the board would voluntarily declassify itself, aligning with practices common among S&P 500 companies. In his letter, Wilson emphasized, if the current board cannot make the necessary changes to enhance shareholder value, then shareholders deserve the opportunity to vote on all directors and effect change. However, our staggered board currently limits us to voting on only 3 directors at a time. Despite these challenges, Wilson had a plan and enlisted Goldman Sachs to help him regain control of his company. Wilson was eager for a new board, so he teamed up with Goldman Sachs, the bank that helped make Lululemon profitable. Goldman Sachs, which had taken Lululemon public in 2007, readily agreed to work with Wilson to regain control of the company. They considered several strategies, including launching a proxy fight for board seats or partnering with a private equity firm for a buyout. Back in 2007, UBS, an investment bank, had tried to woo Lululemon by dressing 75 of its bankers in Lululemon gear for a photo shoot in Central Park. UBS included these pictures in their pitch to become underwriters for Lululemon's public offering. Goldman Sachs went a step further by having its bankers show up to the actual meeting dressed in Lululemon athleisure wear. This effort paid off, and Goldman Sachs became Lululemon's partner for their IPO. Over the years, Wilson's partnership with Goldman Sachs has only grown stronger. A recent regulatory filing revealed that an investment firm representing Wilson pledged 1.8 million Lululemon shares, nearly 20% of his total holdings, as collateral for a $200 million margin loan from the U.S. bank. However, this move comes at a difficult time for Lululemon, whose stock has been declining. Wilson's stake, valued at approximately $660 million based on the closing price in May 2024, is facing challenges as Lululemon stock has dropped by 25% since late March due to its disappointing U.S. sales and sales projections. After a 38% decline so far this year, with the current price around $323 per share, we believe Lululemon has the potential to bounce back in the longer term. Lulu's stock has seen little change, moving slightly from $350 in early January 2021 to around $320 now. Overall, Lulu's stock performance relative to the index has been lackluster. The stock's returns were 12% in 2021, negative 18% in 2022, and 60% in 2023. In comparison, the S&P 500 had returns of 27% in 2021, negative 19% in 2022, and 24% in 2023, showing that Lulu underperformed the S&P in 2021. The current Chief Executive Officer, Calvin McDonald, reported on the company's performance in the first quarter. He highlighted the strong momentum in international markets, showcasing the global appeal of the brand. McDonald stated, "Guests responded well to our product innovations across categories, and we are pleased by the progress we are making to optimize our U.S. product assortment. Looking ahead, we continue to have a significant runway for growth and are confident in our team's ability to powerfully deliver for our guests in 2024 and beyond." For the first quarter of 2024, compared to the first quarter of 2023, net revenue increased by 10% to $2.2 billion. Or 11% on a constant dollar basis. In the Americas, net revenue grew by 3% or 4% on a constant dollar basis. International net revenue increased by 35% or 40% on a constant dollar basis. Comparable sales went up by 6% or 7% on a constant dollar basis. Looking ahead to the second quarter of 2024, the company expects net revenue to be between $2.4 billion and $2.42 billion, representing growth of 9% to 10%. Diluted earnings per share for the quarter are projected to be in the range of $2.92 to $2.97, assuming a tax rate of approximately 30%. For the full year of 2024, the company maintains its expectation for net revenue to be between $10.7 billion and $10.8 billion. It appears that Wilson and the new board are in agreement on many issues, as there haven't been any recent conflicts between them. We hope this harmonious relationship continues for a long time. Click on the next video on your screen for another boardroom battle.